news and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Zurich. Here's what's coming up on today's show. European stocks rise on bets that today's U.S. consumer price report will allow the Fed to start cutting rates in September. UBS rallies after beating expectations with net income in the second quarter coming in at double estimates. We'll have more from our interview with the chief executive, Sergio Ermotti, in just anticipation. Plus, Japanese Prime Minister Fumio Kishida announces he will not run for a second term, while traders already speculating his successor could make it easier for the BOJ to raise rates at a quicker pace. Now, a couple of things we need to keep an eye on. Of course, it's all about US CPI. We have a lot of earnings. We spoke to many chief executives today, but European stocks overall tracking in advance. Actually, what we saw in Asia on bets that the US consumer price report will allow the Fed to start reducing interest rates in September. Now, UBS definitely leading some of the gains, maybe a little bit less than they did at the open, but again, leading gains in European financial services. Again, this is after the bank's second quarter profit actually beat estimates thanks to strong client inflow, but also investment banking revenue. Miners dropping a touch, iron ore slumping, and then I'm looking at a couple of other things, including yen pound actually falling against the dollar after UK inflation data came in below forecast. Yen 147.39. You can see pound, and then Brent crude 81.14. So back to corporates and UBS. The reason we're here in Zurich has delivered a big profit beat in the second quarter. Its net income, $1.1 billion, was more than double analyst estimates. Now, Chief Executive Officer Sergio Ermotti spoke to us earlier about the results as well as capital reforms after the takeover of Credit Suisse.
Well, first of all, I'm proud that we made very good progress in the integration, and so we significantly now reduced the risk of the integration itself. And we did that while staying close to clients, deliver very good financial results, which makes me comfortable that we are on a good way to deliver on our 2026 financial targets. Of course, it's going to take a lot of time to restore the profitability. Because the amount of tasks to be done is huge, but I'm confident that we are on a good way to deliver.
There's always this overhang about the capital requirements that regulators are talking about. You've been very vocal about it. How do you see it playing out?
Well, look, we started technical discussions with all interested parties. We will see how it comes out. I think that we are all for making the system more resilient, more safe. On the other hand, we have to recognize that the current system has served us well, so much that we were able to step in and rescue Credit Suisse. So we need to look at the lessons learned from this crisis, but also on the other end, we need to ensure that the outcome is proportionate and is also one that allows us to continue to be a driver of growth and well-being for the Swiss economy.
So your biggest concern, I mean, at any point, could it touch dividend or shareholder buybacks?
I don't think this will happen. I think that in any case, it's premature to speculate on the outcome.
I know that there's a number of ways, of course, of dealing with this if something big were to happen in this space. One of them is probably SRT deals. Are regulators, have they given you a green light on them?
No, well, look, I don't think this is SRT are something that can be used in a focused and selective way to manage economic risk and not to manage regulatory capital issues per se. So in that sense, I don't think it's a solution.
Is there a solution that you're looking at to kind of minimize the impact on UBS?
I think it's premature to speculate because we don't know really the outcome of the discussions. We will find out probably late this year, early part of 2025, the direction of travel, and then we can make an assessment.
Sergio, talk to me a little bit about wealth management. So there's been a number of, high-profile people. Iqbal, for example, is moving to Asia. What's your biggest hope for wealth, and in what region?
Well, Iqbal has moved to Asia with his family, so I think we continue to see Asia, China, and the US as a big driver of growth. They are very important elements of our strategy together with our position in Switzerland as a leading universal bank, and you saw also in the second quarter results, but overall that Asia continues to be a pretty good secular driver of growth for our business.
What about the U.S.?
The U.S., we are. I'm glad we are making good progress with some initiatives to make the IB and wealth management working closer together. This has helped our transaction activities in wealth management. We are also preparing the platform to institutionalize more of our client relationships. So, and now with the new leadership team, with Rob Karofsky, we are really preparing for the next phase of our plans, and I'm confident that we will improve our results in the U.S. In the foreseeable future.
Quite quickly, how aggressive do you want to be in the U.S. in terms of
I think we have a plan, and we set our plan that we believe we need to get to mid-teens pre-tax profit margins in the next two or 3 years, and then from there onwards we will look at ways to improve further. But it takes time to do that. Of course, the environment is not really favorable. We need to do things with sustainability in mind, and not just to aim to do quick wins.
I mean, are you looking at potential acquisitions, or will most of everything will be through organic?
No, we have to do our own work and fix the issues we need to fix, and leverage better the capabilities we have right now, and they are enough driver of growth and for us in the foreseeable future.
Do you see any M&A on the cards? I mean, are you ready to acquire even something small?
We are quite busy with M&A right now, so it's difficult for us to think about M&A. So I think that we have enough on our plate.
Sergio Ermotti, there, the UBS Chief Executive Officer, speaking to me earlier. Now, investors watching for key U.S. CPI data, hoping that a smaller increase will cement a September rate cut. Now, this comes after the Atlanta Fed President Raphael Bostic said he's looking for a little more data before supporting a reduction in interest rates. Now, Bostic emphasized that it would be really bad if the Fed had to change course once it begins cutting. Well, let's talk now to Charlotte Ryland, Head of Investment at CCLA Investment Management. Charlotte, thank you so much for joining us today. All eyes, of course, on U.S. CPI, but does the volatility we saw last week change any of your investment calls?
No, I mean, to be honest, I think, we've had a huge amount of moves from markets, but actually I think fundamentally what's happening in the economy and interest rate expectations probably shouldn't have changed all that much. I mean, I think there's been a lot of speculation about, slightly softer labour data, clearly some signs of a bit of slowing down in terms of consumer, but I don't think there's anything that's really pointing at the moment towards a recession. And you'd need a recession to see, very significant moves down in interest rates. I mean, it's entirely possible we had slightly CPI today, and therefore that might lead to a cut. But I think, these expectations of 5, 6, 7 cuts that the markets are starting to price in, I think it's probably a bit too optimistic.
Yeah. So why is the market too optimistic in your eyes? Is there? We're just speaking to Sergio Ermotti, the chief executive of UBS, and he's like, there's a concern that actually the markets are just too reliant on central banks and expect them to do all the work for them.
Yeah, no, I think we've all got so used to what back in the day was the Greenspan put, wasn't it? But the markets were, as soon as the markets had a sell-off, that central banks would rush back in. But I think what's different today is that we've had an inflationary period. Central banks are clearly very worried about that still. There's still a bit of heat particularly in terms of service inflation, and I think they're going to remain reasonably cautious. So we've seen the Bank of England move once, maybe they may move again sort of into the autumn, but these expectations of a lot of rate cuts, unless we have a much more seriously wrong with the economy, I suspect a bit optimistic.
Charlotte, given the sell-off we saw last week, is now a good time to get back into tech, or have you never really let it go?
We were trimming sort of over the summer, some of our positions, but it is still an area that we have quite a lot of exposure to, and I think the key development at the end of the month is clearly going to be the Nvidia numbers and whether they can continue to show that sort of very, very dramatic growth that they have done. But areas like software have had quite a difficult year actually. They haven't, companies like Adobe, companies like Fortinet, haven't had a steady year. But, the numbers are continuing to look quite attractive. So I think if you look beyond the Magnificent Seven, actually there are still some interesting companies out there still producing very good growth.
When you look at some of the consumer pressure, I don't know whether you're expecting more consumer pressure or it's a tricky business, for example, for luxury because of the weakness we're seeing in China.
Yeah, I mean, I think certainly luxury, a lot of the players like Burberry, of course, have had an extremely difficult time. Partly that's a little bit to do with their own brand positioning, but equally sort of like Kering with their Gucci brand have really struggled. So I think, the place to be probably within luxury at the moment is the very high end level. So things like a Hermes, for example, which really control their supply of goods, continuing to be able to, get pricing and get reasonable demand for their products. But, more generally, it is going to be difficult. And that's not just China. It's also a bit of a slowdown in the US where I had, a lot of spending post-pandemic. But of course, those pandemic checks have begun to run out.
When you look at healthcare, is there anything driving? Some of the big companies are doing quite well, but it's all because of drug discovery. We also have the U.S. election. That's probably the big one this year. And it's unclear how much government spending will go into, for example, healthcare. So where do you see opportunities in healthcare right now?
Sure. So, I mean, I think, still the sort of life science tools companies which have, had a bit of an overhang from the pandemic where there was an awful lot of spending on drug discovery, but, diagnostics and all of those kind of tools as well. They've had a quite difficult time with destocking. I think they're looking more attractive now to, Thermo Fisher's, the Danahers of this world. I mean, within pharmaceuticals, it remains, there's a few companies out there, Novo Nordisk, Lilly, AstraZeneca, up to new highs as well, where they have got that decent pipeline. But, we probably prefer to be playing some of the more device end of things and some of the life sciences rather than just pharma names.
So, Charlotte, I know you really break down your kind of market analysis by industries and sectors. Are there any country analysis that makes you prefer stock over the other? And where do you put the UK right now?
No, I mean, I think, China remains an extremely difficult economy at the moment. I think that continues to be an overhang for businesses that have a large exposure to that. We're reasonably positive in India and the growth story that can continue there. But I mean, we're investing globally and, so that's not geographic sort of allocation is not particularly something for us. I mean, in terms of the UK, there are some really interesting companies within the UK market. So not things like London Stock Exchange, things like Ashtead, which are really exposed to some of the infrastructure spending that's going on within the US. So there's some interesting opportunities within the UK, even if, sort of there's a larger market cap companies, perhaps not quite so attractive.
Charlotte, thanks so much. Charlotte Ryland there from CCLA Investment Management. Now, coming up, we'll have plenty more. Of course, on the Middle East, U.S. Secretary of State Antony Blinken reportedly delays his trip to the Middle East due to regional uncertainty. We'll get the latest with Sanam Vakil from Chatham House. That's next, and this is Bloomberg. U.S. Secretary of State Antony Blinken has reportedly postponed his latest trip to the Middle East despite a flurry of diplomatic activity in a renewed push for Gaza truce talks. Now, for more, let's bring in Sanam Vakil, Director of the Middle East and North Africa Program at Chatham House. Dr. Vakil, thank you so much for joining us. I don't know whether it means that there's, something being defeated because the Secretary of State has postponed his trip to the Middle East, or whether we're expecting something big to happen in terms of retaliation.
Good morning. Thank you for having me. Well, I think that there's a lot of uncertainty right now. Over the past few days, we've heard reports that an Iranian escalation and response to the killing of Ismail Haniyeh in Tehran is coming. And that escalation could not just come from Tehran, but also from Hezbollah and other actors that are part of the Iran-backed axis of resistance. And this escalation is perhaps going to impact the ceasefire talks that are meant to begin on August 15th in Cairo. So there is a big push for diplomacy and for this ceasefire to finally be obtained after 10 months. But at the same time, it's unclear how the Iranians are going to respond. And that could explain the delay in Secretary Blinken's trip.
What do you think the chances of a ceasefire at this point are?
I think it's really slim, to be very honest, and I'm sorry to be the bearer of bad news, but 10 months on from the war in Gaza, the leaders of Hamas, Prime Minister Netanyahu and President Biden are not all on the same page. Yahya Sinwar, who has also stepped up into Ismail Haniya's shoes after his assassination in Tehran, is looking for a permanent ceasefire and is looking for a plan to be implemented immediately to address humanitarian issues, but to stop the war. Benjamin Netanyahu on the Israeli side, however, has to address Israel's security crisis. And Israel has a domestic security crisis with Hamas still alive and lobbing rockets over into Israel. But also it has a crisis on its borders with Hezbollah, also shooting back and forth on the northern border, and tensions with Iran are still quite heated. So he's not looking for a ceasefire, all of this to say. So with these timelines very far off and with the objectives of each leader also far off, it seems unlikely that a ceasefire will be met so quickly, unfortunately.
But Dr. Vakil, I mean, we also heard yesterday from U.S. President Joe Biden that he believed that actually a possible ceasefire could prevent an Iranian attack on Israel. I mean, if Iran is showing this also to show a tour of force domestically, are the two linked?
Well, yes, to a certain degree it is linked. Iran and the axis of resistance have maintained that their military activities in response are in order to push for a ceasefire. They believe that with a ceasefire, and they've stated as such, that the escalation in the military domain will come to an end. And so that's what they're pushing for. They don't want to compromise the ceasefire, or they don't want to be seen to compromise a potential ceasefire. So that could explain why Iran is holding off and dragging out its response. We're in a 2-week window now. And my expectation is that Iran will wait a few more days to see what happens with the ceasefire talks. But at the same time, of course, there is domestic pressure in Iran. Iran's conservatives and hardliners believe that Iran's sovereignty was breached when Haniya was killed in Tehran. It was also hugely embarrassing that on their watch, Israel was so successful at taking out a high-level Hamas official. So in order to address Iran's deterrence in the region, a response is needed.
Dr. Vakil, I mean, it is also, heartbreaking every day to look at the loss of civilian lives in Gaza and elsewhere. How does the game change after the U.S. election? What does it mean for civilians in the region?
I think you're so right to bring up the human side of this war and conflict that too often is forgotten. Gazans, Palestinians are being bombed every day. There is a humanitarian catastrophe underway, famine. I was just reading a story this morning about how girls and women are cutting their hair because they just don't have brushes and combs to brush their hair. So, things are very grave. And there needs to be urgent international attention and pressure brought on both Israel and Hamas in order to bring this to a close. I think that's imperative. Going into November, I think there is a lot of uncertainty. Kamala Harris, the Democratic nominee and vice president, has taken a much more critical line towards Israel's lack of regard for civilian life. But it doesn't mean that the U.S. position and strong support for Israel is going to change. That relationship is intrinsic. It's key. And I think that will be very much, and perhaps a Democratic win in November could lead to further support for Palestinian statehood that we haven't seen from the United States in a meaningful way. But President Trump, on the other hand, hasn't really made clear his long-term.
All right, I think we're seeing a couple of difficulties actually to connect Dr. Vakil. We'll have plenty more from her a little bit later on. Sanam Vakil there from Chatham House. Coming up, Carlsberg increases its profit growth outlook for the year as its cost-cutting offsets weak demand. Our interview with the Danish Brewers chief executive is next, and this is Bloomberg.
We, just like every other consumer goods company, have been hit very hard on the weather front towards the end of the quarter. At the same time, I have to say the underlying European consumer has stabilized, and we are cautiously optimistic around the European consumer. But we're not out of the doldrums. But it's not like we're deteriorating further from here.
Well, that was the Carlsberg Chief Executive Officer speaking to Bloomberg. Now, coming up, Sergio Ermotti, the Chief Executive of UBS, gives us his view on recent market volatility, potential rate cuts from the Fed as well. More of our conversation next, and this is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Zurich, and these are your top stories. European stocks rise on bets that today's U.S. consumer price report will allow the Fed to start cutting rates in September. UBS rallies after beating expectations with net income in the second quarter coming in at double estimates. We'll have more from our interview with the Chief Executive, Sergio Ermotti, in just a moment. Plus, Japanese Prime Minister Fumio Kishida announces he will not run for a second term. Traders already speculating his successor could make it easier for the BOJ to raise rates at a quicker pace. So the chief executive of UBS says recent market volatility is a, quote, wake-up call for investors to diversify their assets, while Sergio Ermotti spoke to me earlier today after the Swiss bank posted a big earnings beat.
For the markets and for many investors, what happened early on this month has been a wake-up call, right? So, I mean, you look at the magnitude of the movements should make people think carefully about having a proper diversification and being very thoughtful about the way you invest money. So in that sense, the fact that we basically made back everything within 1 week or two cannot be taken as a temporary issues. In my point of view, one has to really think that probably is a sign of some elements of fragility in the system.
But does it get easier as maybe we get a Fed cut, or does it get more complicated as we go to the U.S. election?
But look, when central bank cuts, it depends how they cut and why they cut. So if of course, there is now capacity probably to accommodate cuts based on lower inflation. But it's also, we need to watch exactly also what are the underlying economic drivers, and to the extent that the Fed is forced to cut more aggressively because of economic downturns, that would not really be good for the market. So we need to really watch why rates would come down and how quickly they come down. In general, we do expect and we see room for a potential rate cuts in the foreseeable future, but I wouldn't really be in the camp of predicting that the Fed will go as far as the market wants the Fed to go.
There's been a lot of focus on private markets. How does that interplay actually change, and what does it mean for UBS?
No, the big change in client behaviors we saw in the last 24 months was clearly more diversification towards fixed income and so on and so forth. When rates comes down, of course, maybe part of it will go to search for higher yield maybe in private credit, but not only. But we do believe that as rates comes down, you will see also potentially people moving back to more alternative assets, and also, which is important to understand, the headwinds we face in the industry, but also at UBS in NII, in margins on interest rates, will be also offset by clients taking more leverage potentially. So it depends how it plays out. It depends what are the underlying economic dynamics.
But so do you worry that there could be a systemic risk or semi-systemic risk?
I don't think so. No, I don't think I don't see systemic risk, but volatility high volatility doesn't mean that you have systemic risks.
But what does it mean? High volatility means you need to be on the right side of the trade.
Higher volatility. I mean, to be honest, I think if you look at high volatility can be an absolute or a relative concept. So because we have seen so low volatility in the last few quarters, I do believe that we're going to see higher volatility. If this is very high and permanently high, it's another matter, but I do believe we're going to see more volatility.
So it can't be quarterly results if I don't ask you about hiring or actually job losses. Can you give us an update on what the next 6 and then 12 months will bring?
Well, you saw that the restructuring and fixing the elements of problems in the integration are unfortunately driving job losses. We took down around 3,000 headcount this quarter, so I think that we will continue to have to do that in order to restore the profitability UBS had before the acquisition.
Well, that was Sergio Ermotti, the UBS Chief Executive Officer, speaking to me a little bit earlier on. Now, our finance reporter who covers UBS here in Zurich is with me, Miriam Belezu, and Paul Davies, global banking columnist at Bloomberg Opinion, is also joining from London. So thank you both for joining us. Miriam, I mean, we were together this morning when the earnings came out. Sergio Ermotti was actually, of course, in a pretty good mood given the results, but I guess the big elephant in the room or the big overhang is what happens to capital requirements.
Absolutely, and surprisingly, there was no mention of it, or very little update anyway, but this is definitely something that will kind of hang a cloud that hangs over the bank, because there is still uncertainty. We're still waiting to see what the Swiss government will decide, but that's going to be a big bill for UBS, so something that they cannot just disregard. They have announced last quarter that they're adding an additional 20 billion of capital, so that would come on top of that, and it's non-negligible sort of amount.
So, Paul, what's your take on this? When you look at the capital, requirements, again, I mean, this could be 25 billion. It's not something that can be ignored, and yet it seems we don't have a timeline, we don't have the amount, and we don't really know behind closed doors how much lobbying UBS is doing.
I mean, I'm sure they're doing plenty of lobbying behind closed doors, but it's. I think they said that they expect to have much clearer idea by the end of this year or the first quarter of next year. So that will be helpful. I mean, the main problem here, or the main issue, is going to be the treatment of a lot of foreign subsidiaries. That's where they're worried about, the regulator taking a much stiffer stance than the Basel III kind of global requirements demands, and maybe kind of taking more of that away from their core capital as well, kind of like not only having a higher requirement for it, but also imposing that requirement in a tougher way. So, I mean, it's still very, very unclear about how much money that would mean. I don't think it would be as much as 25 billion, but hopefully by the first quarter that will all be much clearer.
Yeah, and it's interesting, Miriam, because I did try and ask Sergio Ermotti a couple of times, but he says, look, it's too soon to speculate. He doesn't want to speculate. And I don't know whether he just doesn't want to give the markets something to worry about, given that internally, whatever they can do, they seem to be trying to.
Absolutely, and I think they have a rough idea of the magnitude of the amount that will come. But on the analyst call just earlier, Sergio Ermotti and Todd Tuckner were talking about kind of a short-term disadvantage for them in Switzerland, definitely. So they are aware, and this is a big topic, and I think it's we'll have a lot more clarity in the coming month. But there's definitely conversation behind closed doors and a lot of lobbying happening.
But we've also seen some changes in wealth management. So you have Iqbal Khan being sent to Asia, where they really want to grow. There's also a lot of focus on the US. How difficult is it going to be to grow in this crowded space?
Well, obviously, it's very competitive. I mean, I guess there's a couple of things to watch as, interest rates come down. It will be their ability to convert, cash balances, deposits into, higher fee income kind of management accounts, which will be quite important. I mean, especially in Asia, they've done very well at holding on to a lot of Credit Suisse clients out there. In the US, it's a different story. Obviously, it's a very, very competitive market. They don't really want to go down market. They don't want to go away from their kind of core, ultra and high net worth clients. But they do need to sort of find some way of expanding their distribution. And I think maybe once this integration is done, they might look at more ways of other businesses, other ways in which they could distribute more products to their clients and to new clients, and maybe some kind of acquisition or something further down the track.
Miriam, I know that overall, of course, it was a good quarter. The shares rallied, and then they, I guess, recouped some of these gains, and then they're now back up to around 2%. Were there concerns about some underlying weaknesses in divisions, including wealth management?
I think it was more confusion around the mix around the beat this quarter, because it wasn't as clear. It wasn't their core businesses and divisions that have outperformed, but rather the NCL, which is the winding down, and the IB, obviously. But in terms of wealth management, their bread and butter, and PNC, that was where it wasn't as really positive as expected. So I think it was just a reaction from the mix of the beat. But it's getting back there, and I think the market's quite forgiving this morning.
Yeah, and wealth management, I mean, it seems okay, right? That wealth unit, you're seeing inflows, you're seeing clients, I guess client activity definitely not going down.
Yeah, which was quite surprising to see, and very positive in the light of the current kind of geopolitical tension. So this was definitely a positive, but rest to be seen for the second half of the year.
Paul, this is probably, the biggest, if not the hardest job in banking, together with the chairman. What kind of report card would you give leadership at UBS on the integration of Credit Suisse?
Well, I think it's going much better than expected, and certainly much quicker than expected. And as Miriam was saying, it's the non-core book where they're really making much faster advances than they said they would, and that's helped to get them to their kind of cost savings targets much quicker as well. So, I mean, obviously, Sergio Ermotti has come back to kind of do this job and is kind of forcing all of his staff to execute it well. But the woman who's in charge of the non-core business, Bea Martin, who is one of the outsiders maybe to succeed Sergio. I mean, she's obviously performing incredibly well, getting this NCL stuff done much faster than was expected. So that's great for her and great for Sergio.
Yeah, and there's always, Miriam, a lot more that needs to be done. But is there anything that we're looking for in terms of unwinding or a lot more job losses? Again, quietly, there have been jobs that have gone in certain divisions and parts of the company.
Absolutely. We saw quite a high number, actually, of headcount reduction in the past couple of months. So that was quite surprising to see that this is going at a faster pace than anticipated. But there's plenty of other assets from Credit Suisse that UBS wants to exit. And we've seen a transaction that they've announced yesterday on the mortgage services side. So we can expect a lot more of that, and just an acceleration of the wind down of the NCL business, and also obviously the winding down of the shrinking Credit Suisse's UBS investment bank in the US.
Paul, how bonuses always figure as one of the top questions also for a lot of these chief executives. How easy for UBS is it to attract top talent right now?
I guess it depends on the area. I mean, I think that they are, one of the things about the Credit Suisse deal is that they got a lot of investment bankers, which, at one time, one of the executives there, they said to me, it's like having a free hit. You've got a bunch of people who've come in who need to prove themselves, who are not on any kind of promise because you've not hired them. They've just sort of landed there. And so they had all of these people who were, I guess, wanting to work hard in order to keep their jobs, in order to give themselves a future within this bank. And so that's that's a great motivating factor in itself, right? And so, perhaps their need to hire isn't so great as others. It's, for a spell they were going through, they were trying to get rid of people more than hire them necessarily. But yeah, so they've got plenty of energy and they might need to upgrade some people in some areas, but they've got plenty of motivation among the people that they've already got to try and improve the business that they're doing, I suppose.
So interesting. Thank you both for joining us. Our finance reporter Miriam Belezo and Paul Davies, even if Paul did not get the white linen memo jacket, but great content as always from Bloomberg Opinion. Now, the chief executive and the deputy of the Norges Bank Investment Management, the world's individual biggest holder of STOXX, is giving a press conference on their first half results and changes to their holdings. Well, you can continue to watch that on LiveGo on your Bloomberg terminal. Then we'll be speaking with the Norges Bank chief executive Nicolai Tangen at 11:30 a.m. UK time. It's always a great interview. It's never dull. Mr. Tangen saying just minutes ago that it will be difficult to generate returns ahead. Coming up, Japan is set for a new leader after the Prime Minister, Fumio Kishida, announces he will not run for a second term. We look at the possible successors. That's next, and this is Bloomberg. Now let's turn our attention to Japan because it's set to get a new prime minister. Fumio Kishida says he will not run for a second term as leader of the long-ruling Liberal Democratic Party this September.
今回の総裁選挙では自民党が
The LDP needs to show that it's changing and that the public can see the transformation. The best way to do so is for me to step aside. Therefore, I will not be running in the upcoming LDP leadership election. I will devote myself to supporting the new leader selected through the process as a foot soldier.
Let's bring in Roz Matheson, Bloomberg's EMEA news director. Hi, Roz. So Kishida was relatively popular when he took office almost 3 years ago. What went wrong?
Well, he was, as you say, quite popular when he took over. And obviously this news means that he will no longer be LDP leader at the party election. Whoever leads the LDP, the ruling party, becomes prime minister, or at least the candidate also for the further election. And he came in being quite popular, but things went pretty awry. In fact, his popularity has been falling and falling for many months. And things that he's done, including tax rebates, haven't really seemed to resonate with voters. They'd be concerned about where the yen is. They'd be concerned about inflation. But also they've been concerned about this sort of long-running, all-consuming scandals involving the ruling party, including about these sort of slush funds, these political donation funds. They're quite obscure. They're tied to individual politicians. They're tied to factions in the LDP. And they're very, very opaque. And the question is, are these funds all above board? Are they declared? What's the process for them? And even though they've existed well before Kishida, he has been around when they really burst into the public consciousness, and he hasn't managed to really manage that situation with those slush funds and with voters in general. So that's hit his popularity. So in a way, the fact he's decided not to run at the party election is not that surprising. The question now, of course, is who will replace him?
That's $1 million question. And so who do you think is most likely to replace him in September, and how will they differ on policy?
It'll be interesting to see. I mean, right now, there's no absolute front runner. I mean, Shigeru Ishiba is probably the one. He polls quite well with voters in general. He's just never had the factional heft to become the prime minister or the leader of the party, but he polls very well with voters, and he's seen as someone who can resonate with voters in general. He's a pragmatist when it comes to foreign policy. He's had years of experience in Japanese politics. He's sort of in alignment with the BOJ or normalization. But really, there's not that much daylight between any leader of the LDP on economic policy. This is a slow-moving, conservative, careful party that tends not to make sudden changes in policy when it comes to the economy. So you wouldn't expect to see massive shifts there, whoever is in charge. You might see a little bit of a difference around how they approach the BOJ. I mean, some of the other potential candidates have been pushing the BOJ to be more transparent about the trajectory around interest rates. So there might be a bit of something there. Some of the candidates tend to be more hawkish on foreign policy. There's one who was a former heavy metal drummer who's now become a hardline conservative, Asane Takeichi, and she would take a very hard line on things like China, for example. So you can expect tensions with China if she were to become prime minister. And of course, the relationships, for Japan with the US and China are both very important. But on economic policy, not a lot of change between any of them.
Ross, thank you so much, as always, for the terrific insight. Ross Matheson, Bloomberg's EMEA News Director, of course, sharing her thoughts. Coming up, we reveal the U.S. Justice Department is considering a rare bid to break up tech giant Google after a landmark antitrust ruling. We'll bring you our scoop next, and this is Bloomberg. Welcome back, everyone. Now, Thailand's constitutional court has dismissed the Prime Minister, Srettha Thavisin, from office after finding him guilty of an ethical violation, throwing the country into fresh political turmoil. Now, the court said the Prime Minister's appointment of a former lawyer who was once jailed for alleged bribery violated ethical standards. The court's decisions are final and cannot be appealed. So we look at Thai baht, you can see, against the US dollar, 34.978. Now, the US Justice Department is also saying, or is said to be considering, a rare bid to break up Alphabet's Google after a court ruling found the tech giant monopolized the online search market. It could be Washington's first push to dismantle a company for illegal monopolization since unsuccessful efforts to break up Microsoft 2 decades ago. Well, Bloomberg's Tom McKenzie joins us now. Hi, Tom. Great to speak to you. So what more are we hearing from sources?
Yeah, look, Fran, you put it in that historical context for us. This would be momentous if the DOJ, the Department of Justice in the US, goes ahead with this push to break up Google, of course, in terms of what they could be looking at. It would be the nuclear option if they go down this route. And that could include divesting, for example, the Chrome web browser, but also the operating system, Android, from the rest of the business. It's not certain yet that they will go down this route, but the fact that they are considering it is highly significant. And as you say, it will be the first time they've attempted to do this kind of breakup of a major company since Microsoft about 2 decades ago. So we'll see where they land on this. There's a dual track process as well, because the time frame is getting closer. There will be a process in the next month or so where remedies around what the judge found in this most recent case, where they ruled that indeed Google had been a monopoly. That time frame is coming closer. They have to come up with these remedies. And what the findings came through from that judge was that Google paid for these exclusive contracts that allowed them to monopolize the search part of their business, about $29 billion to the likes of Apple and Samsung. So we'll see what the remedies end up being. The most severe one would be a breakup of this business.
Tom, thank you so much. Tom McKenzie there with the very latest on Google. Now, a reminder, we'll also be speaking with the Norges Bank Chief Executive. That is Nikolai Tangen. That's at 11:30 a.m. UK time. Up next, Bloomberg Brief. They'll have a full roundup of what's going on with US CPI. That's a little bit later today. We expect market expectations. Then we have a lot of earnings. Welcome to earnings season, when we have about 5 to 10 chief executives exclusively every day. So enjoy. This is Bloomberg.